My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Let's make friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Get this. We are at a very tricky moment in the business cycle. It's the gut-wrench time where the brown shoots we were looking for turn into the compost of an economic slowdown. It has to happen. And you know what? It's actually going to end up being good news because it means the Fed can start cutting rates sooner than expected. But it still hurts.
The house of pain.
That's why I want to walk you through the pain you're going to experience if you have that diversified portfolio. And if you watch Mad Money, I know you do. We can provide you with some Novocaine. There'll be anesthesia. And yes, there'll be up days like today where the Dow gained 32 points. S&P advanced 0.13%. NASDAQ dipped 0.1%. But you need to expect and anticipate vicious intraday sell-offs like we had today as the Fed plays coy and we await their next move. Or to put it simply, the Fed needs to cut rates because the economy's running out of gas, and that changes the kind of stocks that can work here, at least in the short term. And some very good companies will be left behind, taking their stocks down with them. Today, for example, one of the single best performing stocks, and one we've been monitoring for a long time because it's incredible, several years now, is a company called Builders First Source. They just built one in Brooklyn. It's dynamite. They dropped a bomb on shareholders today and sent the stock down 19%. This is a major supplier to the home builders, and the story they told on their earnings call wasn't great. It always is, so this was a shocker. Listen to this, and I'm quoting. Early momentum in single family has slowed as persistent inflation has cooled short-term expectations for interest rate reduction. Let's see, what are they really saying here? Slowdown alert? There's more. Quote, low existing home inventories and pent-up demand provide an environment where growth has continued to build. Builders across the board are having to navigate affordability issues and challenges with the regulatory environment, land development, and infrastructure, end quote. Okay, now on the surface, you're thinking, what is Cramer talking about? This couldn't have possibly knocked the stock down 19%. There's nothing in here that could do that, correct? Wrong! Because the language is all in code, so let's break it down. Let's parse it. I'll do the code breaking. First, early momentum in single-family homes slowed. You know what that means? It means there were a lot of sales when people thought interest rates were going down. But then the economy surprisingly went on a hot streak, long rates rebounded, and home builders pulled back from buying goods at builders' force that they needed to build new homes. Next, persistent inflation has cooled short-term expectations for interest rate reductions. This is key. Remember, a couple of months ago, people were wondering if the Fed stopped raising rates too soon because inflation was still too high. As long as inflation doesn't come down, we're not going to get the rate cuts. Until last Friday's weaker employment number, there was a budding consensus that the Fed may even have to raise rates. Gets worse. Builders across the board are having to navigate affordability issues. Translation. Our customers, the home builders, have raised prices too high unless rates come down. And since rates haven't come down, there'll be less construction. Less construction, less business for builders. As for the challenges in the regulatory environment and land development infrastructure, that's boilerplate. The home builders need to deal with these problems all the time. It just hasn't mattered for a while because mortgage rates were low enough that the industry didn't need to care. So now let me give you the full Builders First Source translation. Last quarter, we had to deal with the fact that inflation, which we thought was dead, remains very much alive. Our customers, the home builders, put up too many homes when they expected rate cuts, and these houses might not get sold until rates come back down. And that's what obliterated the stock. That's what took it down 19%. But when you see this kind of weakness, you have to ask yourself, what would happen if the Fed were to suddenly start cutting rates? Well, I'll tell you what, this stock would soar. Put it on your shopping list. But that's why I say it's crunch time. Today's sellers are reacting to a quarter where long rates spiked and the Fed didn't cut short rates. But that's now in the rearview mirror. The moment it looks like the Fed's going to cut, guess what? This becomes the number one buy. Now let's talk about my favorite steel company, Nucor. Because of all the infrastructure spending and data center build-out and even the strength of the auditors, the Nucor stock has just been a horse. Yesterday, though, we learned that one grade, just one grade of steel, it's called hot rolled steel, fell from $825 per ton to $760 per ton. That's what happens at the top of the steel cycle. That's how it starts, the rollover, the brown shoots for steel. Because this kind of steel goes into autos, energy, ag, machinery, heavy equipment, and transportation. Steel pricing had remained strong for ages. No more. That data point confirms why this stock has fallen from 203 to 171. Makes sense, doesn't it? Sure, but only until the Fed comes to the rescue. But until then, even as I think that Nucor, the company, is sensational, I know the stock is going to be hostage to steel price cuts, and therefore maybe even more cuts from Nucor stock. Disney stock cratered today. It was awful. It's plummeted down 9.5%. Why? Oh, I can give you all sorts of nonsense, but I'm going to cut right to the paragraph that did it. And I quote, as it relates to demand, while consumers continue to travel in record numbers and we are still seeing healthy demand, we are seeing some evidence of a global moderation from peak post-COVID travel, end quote. Ow! They basically said the post-pandemic travel boom might be ending. You know what? Last week, Booking Holdings reported, and they said the same thing about the U.S. traveler. Now Disney's being hurt by it. No wonder the stock can't catch a break. Is it a buy? Charitable Trust owns it. We saw it a lot higher. We're debating whether to buy it back. Now, sometimes it's so hard to see through this stuff because the code is so thick. Ferrari, one of the great stocks of this year, right? Symbol race. Can't beat that. Quarter after quarter after quarter. That is until today, when the car company gave tepid guidance. Why? One word. Normalization. Sounds neutral, but it's code for something that is very ugly. When Ferrari said their forecast is for normalization, it means that things were really smoking, the company's over-earning, and that was now over, and business was booming, and now it's not. It's going back to normal. Normalization. Where else did we see that? W.K. Kellogg, the cereal company. Listen to this, quote, shipment volume also benefited from an increase in retail inventory versus last year, which we expect to normalize in the second quarter. Normalize. Translation, the stores are stuck with a lot of cereal, so we aren't going to be able to make our Frosted Flakes numbers until they work off the excess inventory. Or in real terms, we're going to miss the next quarter. Now, there are two ways to approach this particular moment. And I have been in this moment many times in the last 40 years. One is to ride it out, knowing that the Fed cavalry will be coming. It'll probably be here sooner than we think because the brown shoots are sprouting everywhere now. Another way, though, is to find the stocks with growth stories that don't depend on the broader economy and overweight them for the moment. I'll give you a couple because I'm a nice guy. I like Merck and now Pfizer for their anti-cancer franchises. Merck's about Keytruda, perhaps the greatest selling drug of all time. Pfizer's now beginning to get stuff out of Seagen, the old Seattle Genetics, plus you got that nice shield. Or, you know what, just go buy Eli Lilly. It's got the GLP-1s, and it can make all that you want. What was that with the Amgen the other day? I forget. This is the way the Charitable Trust is playing it, by the way. In terms of secular growth, stick with the big dogs, please. Don't overthink it. People always want to overthink it. It's NVIDIA, it's Amazon, it's Alphabet, Meta, and Apple. Ooh, NVIDIA reports the 22nd. I'm really shaking. These all have very good stories that don't rely on rate cuts from the Fed. Maybe consider Reddit, by the way, after tonight's beautiful set of numbers. You know what we're going to do? We're going to talk to the CEO, and if you feel like I do, maybe that's the one to buy. For people who want to ride through the valley of the shadow of the Fed, I suggest you own some stocks that will soar with rate cuts, meaning they'll be agonizing to own until J. Powell rides to the rescue. At the same time, take some laughing gas with Amazon, Alphabet, Apple, Meta, or NVIDIA, and some general anesthesia with the drug stocks, but they're the kind of stock equivalent of Xanax, but not Seroquel. If you put all your money in stocks that need rate cuts to win, you will be slaughtered. But if you go all tech and drugs, you'll be left in the dust when the Fed finally starts cutting. So let me give you the bottom line. I'm not telling you to relax. I don't do that on this show. Not with the averages so close to all-time highs. Therefore, it's a little precarious. I'm just saying we are going to the valley of the shadow of death here, and you should fear no evil as long as you have a balanced portfolio. Ralph in New York. Ralph.
Yeah, hi, how you doing? I was just thinking, Nike's down around 45% from its top of the last 3 years. They should wake up and take over Lululemon. I know it's fallen by around a third now. Looks like a discount to me. How about you, Jim?
Well, Lululemon's still expensive, and I know they want to stay independent. It's kind of an interesting idea. In a kind of a perfect world, that would happen. But we're not in a perfect world. In the world we are in, though, I think Nike's very cheap. How about that? Okay, let's go to VJ in California. VJ.
Good afternoon, Jim. This is VJ. I'm calling regarding ExxonMobil. I have 3,400 shares. Pioneer Natural was the one I was invested in. It got bought out. When I got 3,400 shares, they're giving a dividend on 5/14. 5/15 is record date. 5/16, I can sell it. I'm wondering if I'm making the right decision if I sell ExxonMobil and buy ET, MPLX, or Halliburton.
Oh, you make it so hard on me because the first two, I like those dividends. ET and MPLX have fabulous dividends. But you know what? Here's what you're going to do. You're going to sell a quarter of the Exxon and put it in ET and a quarter in MPLX. Don't do the HAL. You don't get the dividend. Keep the other half with Exxon, and you're going to do terrifically. And thank you for the call. We are walking into the valley of the shadow of the Fed. But you should fear no evil as long as you have a balanced portfolio. Oh, man, tonight, Palo Alto Networks is hosting a conference focusing on the intersection of artificial intelligence, cybersecurity, and Keanu Reeves. I'm hearing how the company continues to innovate for a rapidly changing landscape. My exclusive with the CEO. Then Logitech's bounced off its recent lows. I don't know. We got to cover this one. I love their toys, but remember, they're much more than toys. Let's get the latest from the company's top brass. And Reddit. Now, how about this? First publicly traded quarter. They gave me the quarter I thought I would get a year from now. So ask me anything. And am I one of those? Never mind. Let's dig into all the numbers. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
When Cramer favored Palo Alto Networks, PANW, reported in late February, the stock plunged from 366 to 262 overnight. Wall Street freaked out about cautious guidance and some seemingly scary comments on the conference call. What did we do? We bought. The Travel Trust bought the whole way. And it's now gradually started working back. It's now at 305 and change because I'm a big believer in Palo Alto because the demand for cyber protection is endless, especially now that the hackers have access to AI. And this company has the most comprehensive suite of solutions out there. Now, later tonight in San Francisco, Palo Alto is holding a live event. It's going to be called Prepare for a Brand New Fight, where they plan to showcase some of their cutting-edge technologies, including the latest advances in AI-enabled cybersecurity. Before that happens, let's go straight to the source with Nikesh Arora, the chairman and CEO of Palo Alto Networks, for a nice preview. Mr. Arora, welcome back to Mad Money.
Thank you for having me, Jim. Nice to see you again.
Okay, so this weekend, we were all kind of stunned. Warren Buffett talked about what he thinks may be the most dangerous thing out there, which is AI being used by the bad guys. He said he practically sent money to myself over on. He was basically describing how the bad guys can really take advantage of individuals. I know you are about business to business, but you've got a campaign that, to me, says everybody has to worry.
Yeah, Jim, look, you and I have talked about this. It's taken us about 6 to 8 months to really go out and analyze the power of generative AI, see what it can be used for, both for individuals, where you're going to see a lot more deep fake. We have an election coming up. You're going to see a lot of fake audio, a lot of fake video. We've seen live injection of fake video in the middle of conference calls. So it is a bit of the wild, wild west with the use of generative AI for bad actors and bad purposes. I think on the other side, you're seeing organizations, enterprises can't seem to be more excited about anything else. You've got NVIDIA selling a lot of chips. You've got people wanting to build the next set of very large AI inference data clusters. Every organization is clamoring to go deploy generative AI in the next 12, 24, 36 months. So I think this is a major inflection point in technology, which we like to say, AI needs to be secured by design.
Well, let's go there because you mentioned NVIDIA. You need to have as much data as possible. Data is, yes, the coin of the realm. Does anyone have more data than Palo Alto to be able to figure out what the bad guys might do?
You know what, Jim, I was talking to somebody earlier today about this, and I think for the first time, we've reached a technology inflection point where it's advantage incumbents. Traditionally, you find that technology disrupts and new guys come in and new actors come in to win. But in this case, the one who has the most data is likely to be able to build the most effective solutions. We ingest 7.6 petabytes a day, making us one of the largest ingestors of data in the world. And this is barely with a few, 50 or 100 customers between our XDR and XIM platform. Imagine when we have to go serve everybody in the world, we'll be the largest ingester of data by far. So that allows us to analyze the data, allows us to put machine learning models into place, allows us to see something going on with one customer and propagate the solution to everybody else in real time, so the same act cannot happen to the rest of the customer base. So yes, I think this is definitely a moment where lots more data will be ingested, and we are positioned in a really good place to be able to go leverage that capability and fight AI with AI.
Well, I like this. There is skepticism about incumbents. Obviously, with the data, that skepticism should be put to bed.
And by the way, Jim, this is applicable not just in cybersecurity. If you look at traditional business, you will also find that many of the winners of AI will actually come with people who have the ability to interact with customers and get a lot of data.
But there's also companies that have all the data and they don't know what to do with it. Anyone could have gotten what I think is one of the worst hacks I've ever seen, which is the United Health Change Act. And who did they bring in? They brought in you because you understood how to fix it. And they brought you in pretty darn quick. And that's been, I think, maybe the biggest in years, and you got the deal.
Yeah, Jim. We'll talk about deals later in the month when we report earnings. But I think it's public that we were able to work with Mandiant in partnership and go work with Change, try and see. I think our biggest focus at that point in time was bring the pharmacies back online, bring the healthcare system back online, bring the doctors online. I think the management at Change worked really hard very quickly to make that happen, and we were glad that we were able to contribute.
But one of the reasons why we bought all the way down for the trust was because you came on and talked about platformization. It made a ton of sense to us. There were a lot of people who said, oh, come on, that's a gimmick. But the reality is, isn't that exactly what people need? Because they have they have their data in all different places. You have to defend it everywhere.
Jim, in the end, what's going to have to happen is that if you have 10, 20, 30 cybersecurity vendors deployed in your infrastructure, you need the data from all of them. You need it to be consistent. You need it to be AI ready. You need to be able to analyze it on the fly and remediate on the fly. I mean, it is taking now 15 minutes for bad actors to build ransomware attacks using generative AI. It used to take days. It used to take 3 hours 6 months ago. 15 minutes, they can generate a campaign to go create a phishing attack, and they'll turn that into a ransomware event.
Well, I know that you, for instance, you have Salesforce and Accenture. Those are probably two of the most important links in the new era that we're in. That they need to be protected. They need you, and I'm sure it's pretty symbiotic. You get in there, you help them, they help you.
Yeah, I think, Jim, what we're trying to do, what we're launching today is we're basically saying, look, there's three major things we can do in cybersecurity. One, we can infuse all of our products with machine learning and AI, and we're calling it precision AI, by the way, because we think generative AI is great for the creative use case, but in the case of cybersecurity, you need precision. You need to find the right thing at the right time and deploy it at that point in time. So one, we've infused every part of the Palo Alto portfolio with precision AI. Two, we made all of our products simpler to use and deploy using generative AI. So we can use all the LLMs out there to make it easy to interact with Palo Alto products. And three, we've actually built an entire suite where customers can deploy AI secured by design. So your employees will not be putting their data in the wrong place. You'll be able to track that. You'll be able to stop that. Or when you design your beautiful AI application, bad actors cannot hack into it because, these LLMs are all going to be out there from open source, and who knows how the LLMs will get manipulated in the future. I
got it. Okay, now one, I think, expense that I'm not happy with that Palo Alto is taking. Keanu Reeves, why not Nikesh Arora?
Jim, it's so funny. I just put that on LinkedIn. This is a teaser put out for an ad, but there is nobody who personifies fighting bad actors in a Dune-esque, in a John Wick, in a sort of Matrix context than Keanu Reeves. I think that one's going to pay out in spades. And we're also allowed to have a little bit of fun once in a while, Jim.
No, why not? I think you deserve it. You work incredibly hard. This is a terrific campaign. And yes, we want to prepare for a brand new fight for everybody, including the people who are just who live next to a beekeeper and should know how to be able to protect themselves, but they can't. That's Nikesh Arora, Chairman and CEO of Palo Alto Networks. Thank you, Nikesh, for coming on Mad Money.
Thank you for having me, Jim.
All right, Mad Money's back after the break.
Coming up, can this hard-to-beat hardware darling make a splash with AI? Cramer asks the logical questions next.
Whatever happened to that big PC refresh cycle we stopped hearing about when the market sold off last month? Look, we still know it's happening for computers. What about all the peripheral hardware you need for a whole PC setup? Well, that's Logitech International's bread and butter. And earlier last week, they reported an excellent quarter. Stock actually dipped 1.3% the next day, but it was an ugly session. Since then, Logitech stocks come roaring back. So could this be the start of the next leg up? Let's take a closer look with Hanneke Faber. She's the CEO of Logitech International to learn more about the quarter and what she sees going forward. Ms. Faber, welcome back to Mad Money.
Thanks for having me.
Well, you have put out a very clear mission statement. You're really talking about an ambitious mission, enviable assets. But one thing that really caught my eye is that you have, in many ways, become a company that I think is most adapted to the fact that we're no longer in the office.
Absolutely. That's one of the biggest tailwinds we see going forward. Hybrid work. People are working at home, in the office, and on the go. This is good for us because you need equipment everywhere, and you need to video conference.
All right. Well, okay. Let's go video conference first because you're getting to the next level with that. You have a new video conferencing product. Sounds like it's got the edge on everybody else.
Absolutely. So let me first say, our video conferencing business was up in the last quarter, which is great. That business after COVID had declined for a while, but it was up just like all our other businesses, so we're glad to see that. And we have some really cool innovation like the Sight, the Sight video conferencing. It sits in the middle of your big conference table when you got the poor guy who is alone on the screen and there's 12 people in the room and that guy's kind of left out. With this new product, it not only swirls around, but it really is an intelligent producer. It knows not just who's talking, and it will focus on you when you're talking, but when you're opening a packet of potato chips, it knows not to focus on you, which is really key.
But we also know from lots of different self-help books that it's the person who doesn't speak or is too shy that might have the best ideas. So theoretically, it could be an intellectually stimulating way to be able to have this kind of meeting.
Absolutely. So again, this product also, we've trained it with huge data sets and then used machine learning on it. It also knows where the interesting conversations are happening. It can't yet tell who's thinking what, but I bet that's next.
Okay. Well, let's talk about artificial thinking. You're one of the few people who has point blank said, listen, we're using AI to create better products and enhance productivity. I need a concrete example of what AI has done to make a Logitech gear better.
Yeah. So we look at AI in three ways. First of all, internally, makes us better. We're seeing 20% productivity improvements, for example, with our software engineers. So
can I stop you on that for one second? Does that mean you lay off people, or does it mean you have more money to hire people?
It means that we can do more with the same people, and it's really important.
Good.
Yeah. Second, we're improving our products, and we do that first of all in software. So we just launched, for example, the Logi AI Prompt Builder. It's free. We just launched it 2 weeks ago. It provides a shortcut to ChatGPT. You don't have to get out of what you're doing, which is one of the complaints when you use ChatGPT. But this is a shortcut. It's free. We've already had 100, actually close to 1 million unique user interactions. So it really is working.
So
for
I'm
people.
on my, let's say I'm on Claude 3, and I'm toggling back and forth. I don't have to toggle. How's that possible?
AI. We built this little shortcut.
Well, I want to take advantage of the little shortcut because all I do is toggle.
Absolutely. So you don't need to toggle. If you have a Logitech mouse or keyboard, it's built in right now.
Okay.
And then the third one's really improving audio and video by training it with huge data sets like I just talked about for the Sight video conferencing tool. Another example is headsets, where we train the headsets for two-way noise cancellation. We're on the phone, I'm at the airport, you're wearing the Logitech headsets, you're hating that I'm at the airport because you're hearing all the announcements. Your Logitech headsets actually filters out everything that's not my voice. And again, those are large data models and machine learning that's enabling that.
Okay, so how do you get the word? I mean, look, you have a trusted brand.
Yeah.
At the same time, there is virtually, there's 5 oceans of stuff online. How do I find that particular product?
Yeah. This is where brand building does come in. We do have a great brand with really good awareness. It's known for being reliable,
Definitely.
being affordable, being good quality. I would say we have an opportunity to make it truly iconic, and that's what we'll work on. You don't do that overnight, but over the years ahead, that's what we're going to be working on.
And then I can't not ask you about gaming. What have you got new for gaming? Because those of us, we have many gamers on our staff, and they always want to know what's new.
Absolutely. So first of all, what's new is gaming grew 8% in the fourth quarter for us, which again we're
unstoppable, huh?
Yes, which we're very excited about. And that's driven by the premium end. which is doing very well for us, the Pro Light mouse, the Pro Light keyboard. It's driven by simulation. You know, Formula One's so hot, which means racing simulation is hot for us as well. And then there's exciting new products like the A50 headset, where you can, with one touch of a button, you go between a PC game and a console game, which is new to the market, doing very well.
Well, look, you next time you come, you know you've got to bring some. You got to bring us some stuff because we're missing. Your stuff is so dazzling looking and so well designed and so exciting. So we'll bring that on the set next time you come.
Absolutely. You just said you're opening your pool this weekend, so I got to send you a big old Ultimate Ears boom speaker.
Well, that's what I've used. And, you know, your predecessor, I bought one, and it's just bought one from, and it's dynamite. I want a better one.
New one coming.
All right, thank you very much. It's Hanneke Faber, CEO of Logitech, a stock that we've liked, by the way, for a very long time, and has not disappointed us. But we got a new CEO, and she hasn't disappointed us either. Mad Money's back after the break.
Coming up, let it or not, here I come. Cramer sits down to hear about the company's IPO and more. Next.
All right, this is an unbelievable story you're about to hear. Ever since Reddit came public in March, people have questioned if this platform for digital communities is actually a good business. Some of those subreddits are way too colorful for mainstream advertisers, put it very diplomatically. But tonight, these guys reported their first quarter as a publicly traded company, and the results were quite simply stupendous. Reddit delivered a huge revenue beat, terrific positive cash flow, surprisingly positive adjusted earnings before interest, taxes, depreciation, and amortization. Now, I wasn't looking for any of these to happen so soon. On top of that, management gave us a much better than expected outlook for the current quarter, including a profitability front. Sensational. So how'd they pull off this amazing surprise? And more important, can we expect more numbers like this going forward? Let's check in with Steve Huffman, a.k.a. Spez, the co-founder, president, and CEO of Reddit, to get a better read on the quarter. Mr. Huffman, or Spez, congrats on the quarter and welcome to Mad Money.
Thank you, Jim. Great to be here.
All right, well, I just got to ask you point blank. How did you do it? I mean, this is the number I thought you might do maybe 4 quarters from now, and you did it now. How did it happen?
Look, long story short, our work is working. Increasingly, our users are finding their home on Reddit, and they're doing so more effectively. And our advertising customers are finding more and more success on Reddit. Really, at the end of the day, since Reddit represents everybody's interests and passions, that means every company's customers are probably on Reddit somewhere. And so simply by making the product easier to use, making our ad tools better and better, we're able to kind of realize that connection.
Well, I think that's really important because a lot of people feel that certain sites age out. They're only good for a discrete period of someone's life. What you're describing is a site that grabs people, maybe even in their formative years, and keeps them.
That's exactly right. So where somebody might age out of social media, they age into Reddit. So we start to pick up users, we call them emerging adults. You know, maybe late teenage years. The peak of the bell curve for us is probably around 25 years old, but then we just keep them. Like, so whatever you're into or going through on Reddit, like all of life's ups and downs and big decisions, they're on Reddit somewhere. And so we build really deep relationships with our users. In fact, they spend more and more time on Reddit over the years is how long we measure account age.
So where are they mostly? Where do you find them? At what subreddit pages? Where are people going to? And are the advertisers aware and seeking those people out? Because if you advertise on linear TV, maybe you're only reaching 1/10 of the people that you want to. Here you might be reaching 100% of the people that you want to.
Sure. So Reddit has big categories that you would expect to see: technology, sports, entertainment. What should I watch? What should I wear? What should I do? But then every interest and passion and hobby is on Reddit as well. I think, one of the most fun things about picking up a new hobby is like talking about what gear you're going to buy. And so Reddit is, I think, inherently commercial in a maybe non-obvious way. But people are on Reddit talking about what they love to do or what they're going to do. And so it makes a not only a fun experience around communities, but a really natural connection with a company's customers.
Well, these numbers show me perhaps there's two Reddits. There's the Reddits that maybe older people remember, and then there's the Reddits that we now learned to this evening that many younger people know, which is this has become their main social media. It's fun. It turns out to be far less brutal than people think. And obviously advertisers have discovered it and realized that it's maybe the ideal place to go.
Well, that's the thing. Reddit is people, and people are fun, and people are interesting. I think sometimes social media, we lose track of that because the incentives are all wrong. But on Reddit, you're literally just connecting with people who have the same interests and passions you do. And so what I think you'll find on Reddit, all over Reddit, is that people are funnier, more interesting, more helpful than we might, I think, give them credit for generally. It just makes for a better experience.
I think that's right. I mean, my daughter fortunately just beat melanoma. And during the period when she was fighting it, she would go every day to Melahomies, which were everybody else who had the same illness, some further along, some not. And it was her place, it was her salvation until her surgery. Now, those would be, someone like that is someone that if I were an advertiser, I want to reach them so badly.
Well, that's what I mean when I say not just what you're into, but what you're going through. And so I'm really happy to hear that she made it through that difficult experience. And I wouldn't be surprised to hear the next time we talk that she's now in there giving advice and wisdom to people who are going through a difficult moment that she now has experience with. And we see this on Reddit all the time, is people helping each other. And the reason they do it is because they enjoy doing it. There's no other hidden incentive on Reddit.
I was going to use the word joyful. We were looking at some sports pages, and there are sites that are just, you can't read them anymore because they're just filled with hate. And then I go look up my Philadelphia Eagles, and there's just joy. There's people talking about a great draft. There's people talking about a great GM. Somehow it's bringing out the better of the person, not the worse.
Hey, look, if Reddit can help you find joy in the Eagles, then we've really done something truly special.
It may be the case, but now, okay, so I got to ask you, here's a typical site that I'm not going to mention the full name, but it's MI and then it has a derogatory term. It's apparently the most fun. This is what people are reading every day. They're trying to find out who people think they are, and they enjoy reading about others. Now, that's content that you don't have to pay for, that I can only imagine the advertisers just getting such a kick out of being next to.
Well, when you go in a community like that, what you find is that people, thousands of people, are telling stories every day they've never told before. And then many other thousands of people are weighing in, gossiping, providing feedback, debating it. And so it's very much what people do, like how people interact in the real world. But there's just like an unlimited supply of fun and interesting things to read and participate in.
All right, well, let's go over it so people don't think that we're just, let's put some numbers on it. The momentum in daily, in average users is extraordinary. I want you to have the floor to be able to talk about how this thing is a juggernaut.
So thank you. So we grew 37% year over year in daily active users. So now we're over 80 million daily active users. That's over 300 million weekly active users. But the reason I'm excited is today, only 50% of our traffic comes from outside of the US. And if you compare that with our peers in social media, that number could be more like 80 to 90%. And so I think there's still so much opportunity to grow in Reddit in just our core business, right? Community and passions and interests are universal. And so we're seeing very nice growth now, but we've got a lot of opportunity looking forward.
Now, something I talked to you about before you came public was the notion of community policing. I initially didn't believe it, but since then, since the time that you talked to me, that you said it's real, I cannot believe how powerful the community is. It's the anti-Gresham's Law. Gresham's Law is the bad drives out the good. How have you been able to come up with the opposite, which is the good drives out the bad?
Well, so at the core, and this is what I've seen, having had a front row seat to Reddit for all these years, is that overwhelmingly people are good and they want to have nice experiences. The key is empowering them to create those experiences. So on Reddit, every user can vote up or down on every piece of content. And so if you don't like something, you can downvote it away. And then our communities are run by users that we call moderators. Those are not employees of Reddit. They're users who create and steward communities on Reddit. And at the end of the day, they're trying to create places that people want to be. And I think that's a very natural human thing to do, but Reddit just reveals that.
Well, it sure does. Now, revenue streams right now, it's largely advertising. You can migrate to other areas too, though. So give me the mosaic of where it is now and where you expect it to be.
So ads is our core business model, probably about 90% of our revenue today. And now, look, I think that has almost unlimited potential. Right? Facebook did $170 billion in ads revenue last year. So from where we sit, that can go forever. But we're also investing in what we call the user economy. So very simply, this is users making money from other users on Reddit. So users subscribing to other users, subscribing to communities, users buying digital goods, like giving each other awards and gifts and that sort of thing. I think that can be, over time, as big as ads. Now we're at the very beginning, but one of our sayings at Reddit is the only thing that scales with users is users. And so I like business models that are powered by users at their core, because I think they can also be huge.
Well, it's amazing. Look, you're now part of this conversation right up there with YouTube and Instagram. And obviously, Snap, I think they do age out, and your people will not do so. This was an amazing quarter. I'm thrilled that you came on to Mad Money to talk about it first, because all I can say is congratulations on a job well done.
Jim, it's very much my pleasure.
Of course.
I'm honored to be here. Thank you.
That's Steve Huffman, co-founder and CEO of Reddit. This was a monster good, unexpected quarter, and Mad Money's back after the break.
When we return, master the markets one stock at a time. The lightning round is up next.
It is time. It's time for the lightning round. Crypto into our calls on really shame. Stock center buy, sell, small to procure another call. Start to be set for the blend. And then the lightning round is over. Are you ready? Ski, time for the lightning round. Cramer's money. I'm going to start with Arye in New York. Arye.
Hi.
Hi.
Mr. Cramer.
How are you?
My grandson and I watch your show religiously, and he has a question for you. He's 10 years old.
Booyah, Mr. Cramer. I watch and enjoy your show very much. I'm 10 years old, and I'm very interested in stocks. I have some money to invest, and what do you think about Caterpillar?
Kid's got horse sense. I like Cat. I think it's got 25 down and 10 up right now because that last quarter wasn't that good, but I like you so much, I'm going to let you keep it. Let's go to Beatrice in California. Beatrice.
Booyah, Mr. Cramer.
Booyah, Beatrice.
Thanks for taking my call.
My pleasure.
Johnson & Johnson has announced an agreement with Shockwave where they're going to acquire all outstanding shares at about $335 per share in cash. What are your thoughts on that?
Well, look, it's a small deal for them. I'm most concerned about I'm worried about the Tau situation. I want them to get it. If they could get that past them, then I would just say buy J&J till the cows come home. Let's go to JR in Washington. JR.
Hi.
Hi.
This is Booyah deal.
Right back at you. What's going on?
The talk I want to know about is AI.
All right, I've always been a fan of Tom Siebel. I've known him for 30 years. That said, I just don't know how to value the stock because they lose a lot of money. So I'm going to take a hard pass, AI. Let's go to Mike in Illinois. Mike.
Hey, Jim, how are you? It's Mike.
I'm doing well.
Chicago. How you doing today?
I'm doing well. How about you?
I got a question. I'm doing great. Thank you. I got a question for you on CME Group. And you think you get great earnings, but the stock's doing nothing. What do you think?
Well, that means you got to stick with it because great earnings will prevail in the end. I like that coming very, very much. Let's go to Paul in Pennsylvania. Paul.
Hey, JC. Paul here. Pittsburgh, PA. Question about a stock I know you like, Palantir. The question is, last quarter, they had a blowout. This quarter, they had a pretty darn good quarter. It was 90% last quarter, 40% growth this quarter.
Right.
Why would they say that the guidance is...
Because people ask for too much. I like that conference call very, very much. I thought that Karp did a great job. I want to go to one of those boot camps and do a big piece on it. I say not to worry. That company is a good company to own right here, right now. Let's go to Dave in New York. Dave.
Hey, Jim. How are you?
I'm good. How are you, Dave?
Good. Great. Thank you. Hey, what do you think of Tesla here?
I'm struggling with Tesla. Because even after this decline, it's still a $567 billion company. And I happen to think that there are problems in China, problems in Germany, problems in the United States, problems in the National Health Trade Program, and problems with the robot. Otherwise, that is dynamite. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, boo-hoo billionaires, how the super rich are getting this market super wrong. Next.
I thought I was going to lose it this morning. For the last 24 hours, we've been subjected to billionaire after billionaire who came on our air and complained about the markets and our leaders, including the Fed, the Treasury Department, and all the mistakes that have led Uncle Sam to be up to his knees in debt. I've listened to these tales of woe, and I thought to myself, why even bother trying to pick stocks when the whole world's run by numbskulls? Then a moment of clarity hit me. Sure, big picture, you could argue everything's awful, but the market doesn't seem to care as we are just a shade from all-time highs. We have Russia, an authoritarian enemy, waging a land war against Ukraine, our basically democratic client state, and it looks like we're losing. There's no end to the war in sight, and if Ukraine loses, the balance of power in Europe will suffer mightily. We have a war in the Middle East where our government support for one country, Israel, seems to be met with universal opprobrium, at least almost, around the world, while kicking up controversy here at home. The rawness of the war in Gaza is front and center every day. And at any given moment, it feels like it could be a geopolitical powder keg across the entire region. At home, we have an elderly president with a terrible approval rating who's very much alienated big business. We have an opposing candidate who's going through an undignified, scatological trial. And it will most likely be followed by another trial that can help him claim that the election was stolen if he loses suboptimal. So the world feels like it's falling apart, the center unable to hold. But has that impacted the stock market at all? Maybe Wall Street likes terrible situations because the market's terrific, with many sectors participating in this rally. In the end, what's really going on? We have incredibly low 3.9% unemployment rate, declining rate of inflation courtesy of our extraordinary Fed chief, who's navigated us to a moment where the economy is finally starting to flag, which gives the Fed some leeway to cut interest rates, like I suggested at the top of the show. All this despite endless catcalls by the billionaire class who seem eager to scare you away from stocks. They're not deliberately trying to lead you astray, but you can't afford to take financial advice from billionaires because their priorities are not your priorities. Billionaires almost always sound downbeat on the stock market because stocks are the wrong asset class for people who are sitting on obscene amounts of money. They're already super rich, for heaven's sake. There's no need for them to take any risks. Now, you can argue that this whole market's just a giant house of cards. But I've heard people call it a house of cards since I got started in the business in 1981, when the Dow was at 1,000. It's at 38,884. That's some house of cards. Back then, I was bombarded by wealthy people saying the stock market could never make me any money, even though it made them fortunes. It did for me, too. From where I sit, the market's reacting to two things. A good tape, meaning how a stock reacts to good news, and an easy Fed because Jay Powell's seeing the same economy we are. In this kind of situation, you have to put blinders on and do some buying, despite the Jeremiahs or the billionaires or the bear strategists who've been hopelessly wrong for so long, but still have a mic because it's almost like they have the commentator equivalent of tenure. At the end of the day, it's okay to be pessimistic about the state of the world. The world's terrible, for heaven's sake. Always has been. But no matter how you feel about the world, you need to stay opportunistic about the stock market, or else you will miss out on virtually every higher move. I like to say there's always a bull market somewhere, and I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow. Last call starts now.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.